Hi everybody, I'm Jamie Trull, your favorite CPA, financial literacy coach, and profit strategist. And we're going to be doing just a quick tip today. And I'm going to go over one of the questions that I get all the time from business owners, which is, how do I pay myself? And I get that question a lot, and I always have to ask people what they mean, because it can mean two different things, right? How do I pay myself, as in technically, right? What's the process for paying myself? And then there's also, how do I pay myself in that, how do I make enough money in my business to make sure that I'm making enough profit to be able to pay myself? So I'm going to talk about both of those briefly here. But first, let's talk about the procedural aspect. So first, how do you actually pay yourself? Well, the way that you do that is going to be dependent on the type of entity that you are. And I do think it's really important that you know what entity type you are. So you are either probably a sole proprietor or an LLC. Let's say you're the sole owner, and either you are not an LLC yet, you haven't formed an official LLC, or maybe you formed an official LLC, but you have not elected to be taxed as an S corporation. That's key to this. You need to know if you've elected to be taxed as an S Corp. If you don't know that, you can look back through your paperwork. More than likely, if you don't know that, you probably aren't, but you want to check. So if you're an LLC or a sole proprietor, you probably file a Schedule C for taxes. For you, the way that you pay yourself is very simple. You take owner's draws. Okay, you can take owner's draws. What does that look like in actual effect? Well, that means that of the profit left in your business, right, the cash in minus the cash out, you can actually take a draw of that cash to pay yourself. Remember, we should be keeping things separate. We should have a totally separate business bank account. If you need recommendations on that, I have a great free one that I recommend below. But you want to make sure that you're keeping everything separate and that you're paying yourself through owner's draws. In QuickBooks, that's probably going to be called something like owner draw or owner pay, something along those lines. It's going to be an equity account. You want to make sure that those payments do not get classified as an expense in whatever accounting software that you are using, okay? If you need an accounting software, I have recommendations and deals on that below as well, so check that out. But that is how you're going to pay yourself. So usually what I do, if I'm taking owner's draws out of my business, is I am actually just going to transfer money. I have the two bank accounts, my business bank account and my personal bank account connected. A lot of times you can do that, in which case you can just transfer money from one to the other. You can write yourself a check, anything like that in order to get money out of one and into the other account. And that's basically your owner draw. That's your pay. Okay, so that's how you pay yourself if you're an LLC or a sole proprietor. Important note, you should not be on payroll if you are not a corporation, S Corp or C Corp, okay? If you aren't being elected to be taxed as an S Corp and you aren't a C Corp, you should not be on payroll. You should not be paying yourself W-2 wages, all right? Now, that is something that happens, yes, when you get to be an S Corp or a C Corp. You should be, if you're an owner working in the business, you should be paying yourself at least some of the money that you make in your company via W-2 wages, which usually I recommend using a payroll type of service. My favorite payroll company is Gusto. If you choose to use Gusto, I think it's super duper user friendly. I have some other videos about Gusto. JamieTrull.com/Gusto will get you a $100 Visa gift card and a free month when you sign up. And it's great for people, even if you're the only person on staff, if you're an S Corp that you are the only employee for, okay, then you want to be using a system like Gusto because they will withhold taxes, they will file all the reports that you need to do, and you will need to be paying yourself a reasonable salary. That is key to an S Corp. That is one of the biggest mistakes that I see when I look at people who have S Corps, that they are not paying themselves a reasonable salary. You are actually not supposed to take all of your earnings out in draws if you are an S Corp or a C Corp, especially if you are someone who is working actively in your business, right? So in that case, you want to get a payroll service, you want to pay yourself a reasonable salary, you can go and look at, pay.com or salaries.com. There's various different websites out there you can go and start to do the reasonable compensation to figure out what is reasonable to pay yourself as salary. Also, talking with an accountant can be a really, really good idea if you're thinking about becoming an S Corp or if you already are one and aren't sure if you're doing things correctly. So as an S Corp, you want to pay that reasonable compensation, but you probably are also taking draws above and beyond your reasonable compensation. So you will have W-2 pay, which is recorded similar to how you would record paying an employee. It's an expense to your business, and you will withhold taxes, right? And the owner's draw, if you take anything above reasonable compensation, if you take owner's draw out in addition, you are going to pay that out to yourself, similar to how you would do an owner's draw from an LLC. You're just going to pay yourself. You're going to withdraw that money. It's going to be something that's recorded in equity. It's not going to be on your P&L. That part's not going to show up on your P&L. And it's just going to be an owner's draw transaction where you can transfer the money to yourself or write yourself a check or whatever makes sense in your situation to get money from your business bank to your personal bank. Okay, so that's the how. That's how you need to be doing it. An S Corp and a C Corp are very similar, so I won't go over a C Corp, but it's very similar. Usually you're going to have reasonable compensation, W-2 wages, and you're going to have owner's draw. And so that is something that is really, really, really key to knowing. Now, if you are like, okay, great, I get how I'm supposed to pay myself, but Jamie, how do I actually pay myself? Well, that's a whole different can of worms, right? I also hear from business owners all the time. They've been in business for a while and haven't actually paid themselves anything yet, right? Sometimes we call it a paycheck, but oftentimes we mean just haven't taken money out of our business to use in our personal life. And if that is the case for you, or if you've taken, maybe you take a little bit of money here, a little bit of money there, you're never really sure how much you can take out, you're not sure what you need to keep in your business. If that is you, that is all about planning, and that is all about making sure that you have a financially fit business. So what is a financially fit business? To me, a financially fit business is one that is where you are really controlling what's going on with the money once it enters your business. Meaning you are collecting revenue from customers and you know what your profit margins are, right? You know what your costs are going to be. You're managing your profit margin and your profit at the end of the day. So you know for every $100 that comes in, you are going to make, let's say, $40, right? Do you know what that is? And a lot of business owners don't really know, right? They kind of, kick money in and it just sort of disappears within the business and they're left with very, very little. And some people do that purposefully to try to save on taxes. But what I will tell you is that is not a good strategy. What I say all the time is you wouldn't take a $50,000 job, right? If you were getting a job with another company, a $50,000 a year job over a $100,000 a year job, everything else being equal, because the taxes were less, right? So don't fall into the trap of spending money you don't need to spend in your business to try to save on taxes, because you're just shooting yourself in the foot. It is important to maximize your profit, but also have a plan for saving for taxes. So the cause can be different for different people. It may be a pricing problem. It may be something with cost going on. It may be something else entirely. And so what I've developed to help you figure out how to have a more profitable business and therefore be able to pay yourself more in your business, I've created a quiz. It's a totally free quiz. It's only 10 questions. It will take you like 3 minutes and it will diagnose what your main problem is that's keeping you from being a more profitable business. So if you want to take that quiz, go to jamietrull.com/quiz, and it's going to give you some great recommendations on what your next step is and what your focus area should be on within the area of your finances so that you can be more profitable and therefore pay yourself more. So I hope you found this really helpful, this quick tip. I'm going to keep doing some additional quick tips, just little short snippet videos to help you out. So make sure that you have liked and subscribed to my channel because I would really appreciate seeing you next time.